go ahead and jump into the show here, guys. Inflation shows no sign of letting up, and the Federal Reserve is likely going to raise interest rates again in a couple weeks to try and rein it in. But economist Mohamed El-Arian tells CBS News that at this point, the Fed is really just trying to save face.
There is a possibility that the Federal Reserve makes another mistake. That is the cost of a Federal Reserve being late. Not only does it have to overcome inflation, but it has to restore its credibility. So yes, I fear that we risk a very high probability of a damaging recession that was totally avoidable.
Now, these are all things that we can't control. We don't have control over that. What we can do is limit what a recession does to a retirement portfolio. So what is your strategy at this point?
Well, I think, first of all, people need to take a deep breath and realize where we're at in the market cycle. They need to think about the fact that the market is making decisions based upon where it thinks things are going to be in a year from now. So, when they're talking about the recession and the fears that are out there, the market's already taking these things into consideration. That's not to say in this type of environment, it's not a good time to make smart decisions about what to do. And, what you want to do is you want to look at repositioning your assets that can benefit from higher interest rates. I had a conversation earlier this week where somebody had come in. She was concerned, rightfully so. She said, I think for the next 2 years, we're in trouble. And, when she looks at the market, and she was talking about, I just, want to stop the bleeding, so to say.
Sure.
And I can appreciate that because it's painful when you see investment accounts go down. One of the mistakes that an investor oftentimes will make is they will let the market go down, their accounts go down in value, then they'll go to something that, feels safe, making a decision because they feel like they're, out of control. They can't control the stock market. So by moving their money to something safe, it feels like it puts them back in control and they're going to wait till things get better. But, what happens in that situation is you only lock in your losses and then you put yourself in a situation where you have no opportunity to benefit if and when prices come back up. So, she may be right, she may be wrong, whether the next 2 years are going to be painful or not. What you need to do as an investor is really look at making sure that you can reposition your portfolio to benefit from higher interest rates. If you're concerned about the downturn in the market, take steps to limit your losses, but don't put yourself in a situation so when the market recovers, you can't participate in gains. A couple of great examples that we've been talking about on this show is government I-bonds. Through the end of this month, the rate is 9.62%. The inflation factor just came out. It was actually higher than expected, which, caused another panic in Wall Street. If you haven't set up a government I-bond account, it's 9.62% is, again, what the current rate is directly from the United States Treasury Department. Higher money market rates. I looked at the Charles Schwab using that as an example. On October 13th, their rate on their money market account was nearly 3%. So look at what you're getting on your checking, your savings, your money market accounts that you have today. Shop around. If you're not getting 3%, those type of rates that are out there today. Also things like fixed annuity rates. Those rates have ranged and started to go up quite a bit because of the rise in interest rates. You can see fixed index annuity rates anywhere from 3 to 5% for, 3 to 5 year type of accounts. Those are good things to take a look at. Next thing is you've got mortgage rates at, record high, 20-year record highs, quickly in that 7% range. Be careful when you're thinking about the debt that you're taking on as a consumer, whether it's a car loan, credit card, a possible mortgage. Be conscious of what the impact of that is. And really, my best advice is be debt-free and eliminate debt as much as possible. And Scott, I think another thing to do is to review your medical expenses. We had recently met with a lady who, Connie had talked about paying $120 a month for her supplemental coverage. And, that may or may not be the right choice for her. But again, now during open enrollment, she has the opportunity to look at things in her medical expenses.
Absolutely. It's I really see this turn in the consumer purchasing of Medicare, these supplemental versus Advantage plans. And, I spoke with several people last week, and almost every one of them are looking at saving money somehow. When you go to the grocery store, inflation rates are just out of control, and these people are really getting pinched. And, a lot of people are asking me, well, why are these Advantage plans so popular now? And, with 28 years experience, I very simply tell them, people are looking to cut some cost here, right? You can get an Advantage plan with a zero premium. So when we did speak with Connie, I was telling her, you're paying $120 a month for your supplement, plus you're paying for a prescription plan, which is could be somewhere between $10 to $15 a month. And if you want dental and vision, it's another $40 a month. So at the end of the day, you're paying $175 a month before you even get out of bed, right? Well, if you're healthy, you can eliminate all of that by choosing an Advantage plan with a zero premium and only paying for services that you use. I really feel with the cost, Medicare is coming down this year. Believe it or not, the Medicare Part B premium is dropping about a gallon of gasoline cost of $5.20 this year, right? Or in 2023. So there is a little bit of relief there, but people are still trying to save some money, and the way to do that is to make sure that you review your plan. Like Nolan, you mentioned, we are in the annual enrollment period. This is the period where you want to do a review of your current plan. If you've got a plan where your premiums are going up, I spoke with someone this past week, and they were up to $175 a month. She was 72 years old, $175 a month for her supplement and her prescription. Going with an Advantage plan, she's going to save roughly $2,500 a year, and she's healthy, right? So it's important to get those free reviews. If your advisor is not doing that today, you are probably with the wrong advisor, because you should already have received your free renewal letter. Please reach out. I'd be happy to help anyone go through your Medicare. It's just another way to kind of cut those costs and kind of limit your month-to-month expenses.
And perhaps even shifting your plan. You might like the Medicare plan that you're already on, this year, but formularies change, your medications change. You may find out that your doctor is no longer in network, and that would be a horrible thing to find out come January after the election period has already happened. So go ahead and do the work right now. Sit down and schedule a time and speak with Scott, review what your options are. There may be a better plan out there for you, something that's going to cost you a little less down the line, or you may find out that you're in the right plan. You want to go and stay the course for this year, but that's a good thing to know and go and cross it off your list, right?
Absolutely. Sometimes we don't make any changes at all. The plan that you have is the best plan moving forward, and that's okay. But you'll never know unless you sit down and do that review, because I've got people that say, what, I just don't have the time, and I've had this plan for 15 years. They don't know what they don't know.
Exactly. I think it's time well spent, and it's not going to cost you anything but that time. Schedule a time to speak with Scott, speak with the team at America's Medicare Associates, or the team at America's Retirement Headquarters. Give a call, 419-794-3030, or online, americasretirementheadquarters.com. Make sure you control what you can control. Start developing that proper plan today.